Hey YouTube, back with another video today, guys. And man, what a different day that we had in the market. We had this kind of uncertainty. We saw some of the big tech giants falling back a little bit. We had Amazon take a little bit of a dip. We had Netflix take a little bit of a dip as well. And rightfully so. I feel like their price to earnings has been a little astronomical. And a lot of people are taking in future growth that just isn't quite there yet. So when people are investing, I think it's very important on how you invest. And I've been trying to tell people that they need to be value investors and they should start doing this at a very young age and start learning about these kind of things, because if we ended up having a bear market, you can almost bet these stocks would take a very big dip. Amazon, I could see fall all the way down to $500. Personally, I don't think it's going to happen anytime soon because everyone loves Amazon and, Netflix as well. They're still really good companies. It just means that they're a little overvalued right now. And I think that these things could really make a turnaround, but it was interesting to see kind of the giants kind of fall back a little bit today. And for me, it really wasn't that big of a deal. Had a bit of the market take a little bit like a correction in my favor. I've been value investing for all of this year. Every time that stocks like started to take a little bit of a fall, I bought a little bit more shares in. As you may know, I may have invested a little bit into GE, and well, GE is doing a little bit up right now, but we'll see how long that lasts. The company as itself is kind of like up in the air, as well as a few other companies that I decided to invest in this year. Newell Brands was another one, and that's one of those companies that's kind of a similar situation to GE. Now, I didn't invest a large sum of money just because I don't have it, but it's kind of that kind of thought process you need to think about, like what kind of companies are not really doing or haven't been doing very well for quite some time that might come out and rise above, kind of like a phoenix. And that's just how you should start investing. And one of those companies that I think is kind of like been trawling along for the past 10 years and hasn't got quite out of the situation that they put themselves in was Sprint. Personally, I don't like Sprint as a company, and that's why I'll never invest in Sprint. But I think it's one of those kind of things that could actually go well. They have like a really cheap value for a lot of their services. And I see a lot of people kind of switching because they want to move into something that's a little bit more affordable. Why pay $200 for 4 lines when you could pay like $25, a line? You could pay half the amount, save yourself $1,200 a year. So that's one of those scenarios that I think you guys should also think about too. If you had an extra $1,200 a year, what would you invest in? There's a couple stocks that I wouldn't mind just picking up for $1,200 a year. So that's just my thoughts and what's kind of going on in the market today. We had a little bit of a drop. Personally, every time things come down a little bit like this, I'm okay with it. So I think the market's been a little overheated for quite some time. A lot of people are like, oh, the Trump is making the economy bad. Well, I mean, we had a run up of 60% still to this day from when he was elected. So I don't think that he had to attribute to that, or much of an attribute to that, but it's just how the economy works. And when things go up, things gonna come back down. And so we've had a little bit of a give. We've fallen back almost down to our February lows again. And, maybe this is the sign of the bear, The bear is coming, and it could be coming. So that's why you should always have money sitting on the side for when the bear market starts taking into full effect, so that you can start purchasing shares of stocks at a much better value. A lot of people I've heard like, well, buy stocks on the uptrend. You don't want to buy stocks when they're down low and they're losing value. And you're right. You don't want stocks to continue to go down past when you invested, because then you lose money. But it's also not good to invest in everything when everything is at its high and then get cut and everything falls down to its bottom. And I see a lot of people do that when they're investing. Like some people are really looking into oh, Amazon took that dip, and I kind of want to get in on that. And I'm like, man, that's a lot of money, and its price to earnings is already really high. Do you really want to take that risk right now? And some people maybe say yes. I personally say no. I wouldn't touch some of those stocks out there, Netflix, Amazon, with a 20-foot pole. Not because they're really expensive, just because I think that they're in these kind of areas where, like, there might be really overvalued. And when those come down, if they continue to come down and their earnings run a little flat, we could enter a bear market really fast. But that's a lot of how the volatility is happening in the market right now as a whole. Like, we have a lot of, kind of going seesawing going on, and we'll see how April pans out, because then we're going to see some of the earnings and how those stocks are doing right now. But if they're like not doing really well and tech isn't really growing really, really fast, boy, I think you're going to see a different shift in the market. And personally, I'm okay with that, because I've had money sitting on the side just so that when I can purchase small shares of little bits of companies at cheaper valuations over a long period of time. You don't want to throw all your money into the market all at once, because that's how you get wiped out all at once. And you want to kind of throw your money in little bits at a time and take your money out little bits at a time. You don't want to. A lot of people also will, like, say this is a chart and it's going up, right? And people will sell out all right here, and they're like, oh, it's going to keep going. Well, you kind of want to do little bits here and there, like as it goes up, you sell a little bit, as it goes up, you sell a little bit more, and once it reaches its peak, you sell a little bit more. And if you think that that's the peak and you still have some shares left, then maybe you dump all the rest of your shares. But you don't want to unload right here, because if you unloaded right here, then you wouldn't have all the rest of the gains. And that same thing kind of strategy goes down for the downturn of a stock. You see a stock going down that you really like, you buy some here, goes down a little bit more, you buy some more, goes down a little bit more, you buy some more. And it's kind of like one of those techniques that I think is really important when it comes to investing as a whole. And I think a lot of people should be investing over the long term. I know a lot of my friends, they really want to get invested. They're really excited about investing. I talk to them about it all the time. And I talked about the capabilities of returns over a long period, and they get even more excited. But they always are kind of like, oh man, I found this stock. It's like a penny stock. Oh, I throw like $100 at it and it'll shoot to the moon. And like, that's not how things work. Unfortunately, if a stock is priced pretty low, there's a reason why it's priced pretty low. Typically, not always. Sometimes you can end up with a situation of a sector that people no longer invest in because it hasn't necessarily brought in tons of money, or people are just focused their directions towards different things, say high growth stocks. Today was a perfect example of the stock market kind of going in this very different direction where everyone was starting to try and find value investing, and I've been doing that the whole time. I haven't even really touched incredibly high growth stocks because I have no need to do them in a highly volatile market. I might touch like a growth stock, I might touch an Amazon, I might touch a Netflix, some shares if they drop to PE ratios of 50. That means something that I would think that would be a better evaluation than something that's 250 times earnings. So, like if you like this video, guys, dislike if you dislike the video, and if you really like the video, please subscribe. I hope to hear from you guys again soon. Thank you very much, and have a great day.